So what's happening with the Bitcoin price, and what is the one indicator that you need to keep your eyes glued on over the next few days, maybe even the next week or so? Let's dig in and see what's going on with cryptocurrency. There is a lot of great news out there in general about Bitcoin, the cryptocurrency space. Companies continue to grow, raise money. A lot of different companies like AMC movie theaters are accepting Bitcoin starting this summer for payment. More and more retailers are starting to get on board. More and more payment processors are starting to come on board with accepting crypto and allowing people to buy and sell crypto through their applications like PayPal. Stripe is getting on board with it, just like Square and some of the other payment gateways we've heard about. That are in credit card companies, banks, things like that, allowing their customers to participate, buy and sell. So what do we need to keep an eye on? So number one, you need to watch traditional markets. You need to watch the traditional economy. Specifically in the United States, we have the regulatory bill and guidance that we're waiting to get passed in terms of institutional adoption. The large institutional investors cannot enter the space. They will not, but most importantly, they cannot enter the space until there is regulation and guidance in terms of how they need to operate, what they need to do for compliance, and how they're going to be taxed and what they have to be taxed on. I know there's a lot of controversy around some of the legislation that's being proposed in terms of taxation, record keeping, reporting, things like that, and who is going to be defined as a broker. So what'll happen is, and what happens in these types of legislation is that sometimes they'll slip these things into other larger bills to get them passed and get them streamlined through the process. They pack tons of stuff into these bills. And then if something gets passed that has a lot of landmines in it, speed bumps and unintended consequences, then the departments that they are largely affected by and regulated by, like the IRS, will provide detailed guidance. And that's where a lot of those things can be clarified in terms of what is actually defined as a broker. So chances are they're not going to change that kind of language in the legislation now. It'll most likely get changed after it passes. And there'll be other things that will pop up in the fine print when they go to try to implement these things. So it's not a serious problem. The IRS, the government, they do allow for future guidance, clarification, and more detailed definitions of regulation once it gets passed like that. And one of the last ones that I can point to is the Opportunity Zone Act that was part of the Tax and Jobs Act in 2019. That was a program where you could shelter a capital gain through investing in opportunity zone businesses or projects, real estate projects. And there was a lot of questions, a lot of uncertainty, and a lot of unclear guidance. So the IRS came out, and Department of Treasury came out with more and more guidance on what the tax issues, consequences, and structure would look like as that process moved forward and as that program moved forward. So there were a lot of unintended consequences, a lot of landmines, a lot of things didn't make any sense. So there were organizations that drafted proposed changes, submitted them, and the changes were allowed to take effect. So just because it gets passed one time initially doesn't mean it's going to be permanently in place, and that they will not consider changes and clarifications and offer future and forward guidance. So don't worry about that. Bitcoin's not worried about it. It's been on a tear. It's been nothing but upward and onward with Bitcoin and Ethereum. And you can see a lot of very similar price action. And again, take a look across the major the major altcoins, major cap altcoins, and take a look at the price action. And you'll notice that the price action is real similar, especially on very specific days. And what we've got here finally is what we're looking for, a higher low. So remember, we talked about what's an uptrend. It's where you get a spike with a pullback, a spike with a pullback. You're setting higher highs and higher lows. So in a downtrend, it's just the opposite. You're dropping with a spike. You drop with a little spike, and you're setting lower highs and lower lows. So right now we've got a lower or a higher low. This was our last lower low right here. So we now set in place a higher low. So now we're looking for a higher high. And as we move along, we kind of had one that tried to set in here at the 42,000 level, but we had one above that at 43. We've got one here that tried to set in at 46, but we have one there at 46.5. So it was just below that. So really at the end of the day, like we talked about all along, you've got this 49.7, 49,000 and change. Really you need to get above 50,000. So you really want to close above 50,000 with confirmation, meaning you close above 50, then you close above 50 again, you continue that upward trend to know that you have a clear trend reversal, because you're still in a downtrend. No matter how you slice it, it's still a downtrend until we cross that last lower high right there before we're off to the races. And then there's one more beyond that at 58,000. But really, once you get past 50,000, I think it's going to be pretty smooth sailing. So the real question is, what is this? Is this real? Is this organic? Is this true trend reversal, or is this a bull trap? Because everybody's been looking for it. And we've had the bear traps along the way, and we've had the bull traps along the way. We've had little ones. When you expand this daily, all these little things here are just little range bull and bear traps, creating liquidity, retracing prior moves. And what are we in the process of doing right now? Retracing this entire pattern all along the way. So every move that we've gone down, we've basically retraced to the upside, and we're in the process of retracing this whole move here. But there is one thing that is standing in the way of this, and it's the one indicator that you really need to keep your eyes on, almost as important as the traditional markets. The only thing that could derail a major recovery right now is a market accident, meaning a sell-off in the traditional markets. We know that we're at all-time highs there. We're running on thin ice there, and it's really only as good as the Fed is willing to continue to prop it up and pump into it, purchase bonds, purchase mortgage-backed securities, keep interest rates low. As soon as they start tapering, as soon as they start raising rates, they're going to take profits in the markets. They're going to sell off. So that's going to bleed all the way through into the cryptocurrencies, especially in the large cap alts, things like that. They're going to, have an effect. They're going to feel the effects of it. And it's just the way it is. And it's really interesting right now when you look at other assets like oil with what's going on. Silver took a beating and it continues to take a beating. Gold's been taking a beating and has continued to take a beating. The dollar is moving up while gold, silver, and all of that is moving down. The Dow transports have bounced a little bit. That's in a downtrend, which is in direct conflict with the trend and the Dow Jones Industrial Average, the S&P, and the NASDAQ, which continue their upward trajectory. So at some point, you got to expect a 10, 15% correction to take profits. You need to harvest profits along the way in any market. It doesn't matter if it's cryptocurrencies or the traditional markets. Professional investors are going to they're going to take profits, and they're going to pull chips off the table along the way. So let's take a look at the hourly and see what's going on here. And you can kind of see we've been in this little range motion, but we've been kind of retracing our steps and kind of taking back any ground that we've lost along the way. But back to the number one indicator that you need to really keep your eyes on, besides the overall market, we have Delta out there that could pose a risk to the economy. But we know that the Fed, central banks, governments around the world are going to step in in a big way like they did last time to keep anything major from happening. But here's the one thing you need to watch right here. Remember our moon phases. And again, I don't study this. I don't use it. Never followed this in my investing. I'm a fisherman, have been my whole life. And I follow the moons for fishing, and they're very effective for fishing with higher high tides, lower low tides, things like that. But as you can see, we just printed a new moon. And what does that mean? Whenever we have a full moon, down below, I've got my white full moons, we pump, right? So let's go ahead and let's see if I can make this thing full screen. Where's my full screen layout here? There it is. Okay, let's go ahead and make this full screen here and take a look at that. So whenever we're cruising along here in this moon phase, you can see that the big white moons down at the bottom, those are the pump moons, those are your bull moons, and your new moons are the little gray moons, the dark moons, the bad moons. Those are when we get these sell-offs. But here's what's interesting. Here's what's interesting about that. Sorry about that. I have my phone on still. What's interesting about that is if you look at the drops that we've had with these new moons, it generally has been anywhere from, here's the biggest right here, we dropped from 59,000 all the way down to 34,000 in the big sell-off back in May of 2021. That was huge. Then the next new moon sell-off went from 40,000 down to 31,000. So that was about a $9,000 move. This one here, the sell-off, even in this little spot right here, if we blow it up, that went from 34,000 down to your low of 28,000, in change, 29,000 basically. It was just above 28,000 where that one popped. Let's get down here and look at that again. So, I mean, we had a spike, 29.2. So we had a spike low there. We had some wicks down here to 28, but that was basically, your low close of about 29.7. So we'll just call it 30,000. But anyways, that went from 34,000 down to 30. So that was a $4,000 drop. This little correction here was basically 42 down to 38. So that was about a $5,000 drop. But there was no moon there. That was just in the little correction in the middle of the phase here because we had that just straight run up. So you got to expect a little pullback, pull some profits off the table. Like I said, the institutions are at play here. As I've showed you, these are orchestrated moves that are deliberate and that are programmed with algorithmic trading bots. And you can see it because it's all of the, it's Bitcoin, Ethereum, and all the top large cap alts that you can see the exact same price action, almost the exact same moves on the exact same days at the exact same times. And you can kind of track these moves all across the markets there. But anyways, just something to watch. It'll be interesting to see what happens if this new moon, like we've seen in the past, turns into a $5,000 to $10,000 drop in price. And if it does, and a lot of people have been calling for a correction, we're at 46 and change right now, could drop you back down to anywhere from around 36,000, which is where our wick lows on this little run midway through began. So that would be 46 down to 36, that'd be 10,000, or it could drop you down to 41,000, which would be where we've seen some resistance right here along the way at that 41,000 level. So kind of interesting. That'd be a $5,000 pullback. A $10,000 pullback would pull you back to this resistance level here at the top of that $30,000 to $36,000 range. Then we had that $40,000 to $45,000 range. So this could potentially put us back into that $40,000 to $45,000 range, or it could be a big one and drop you down to that $35,000 to $40,000 range. Now, the other thing that's interesting to keep your eyes on here, and again, I don't study this, I don't trade this, this isn't part of my strategy, anything like that. I just find it interesting and fascinating to follow this because it has been so effective throughout the years. It's been really, really just interesting if you look at these moon phases. I just think it's interesting and something to look at. Now, the other thing that a lot of people have been talking about lately is this, and I've talked about it, is the hash ribbons buy signal indicator. So we have a blue buy signal now, okay? And that was one thing that we've been looking for. And what does that mean? Does that mean it's time to buy and we're off to the races and bull market on and record highs? What this really means is, in the history of Bitcoin, when you go back and look at it, every single time this blue buy signal has been printed with the hash ribbons indicator, what it indicates is that the prior low of that cycle is your macro bottom for the cycle. So we know that that's basically 30,000. So the question that we've been talking about all along is 30,000 the floor in this market cycle right here? Is that as low as we're going to go? According to the hash ribbons indicator, that would prove out to be true in every case except one, and that would have been the March 2020 sell-off when the pandemic hit. That's the only time where we had a prior hash ribbon blue buy signal. And I think the low at that point around that buy signal was somewhere around $6,600. And it did not go back below that again, except for coronavirus. When we wicked down to about 3,800, we closed down at 4,800 for a low. Then we received another blue buy signal, and that would have been somewhere around that 6,500. And we haven't gone below that since then, even in some of these pullbacks that we had along the way. And even in this current market pullback that we've got right now, we have not gone below that level. So what this would tell you is, based on the history of Bitcoin, that 30,000 is the floor. That's as low as Bitcoin's going to go for this market cycle, unless we have some sort of an anomaly, another black swan event like the pandemic. Now, it doesn't mean that this downtrend is over. It doesn't mean now is the time to buy. But what it does tell you is that that's the low. So as you approach that again, based on the history of this signal, nobody can guarantee anything, But based on the history of Bitcoin, history of this signal, it would tell you that that low is put in. And what I can tell you is, based on the institutions that I talk to and the investors at the institutional level, the hedge fund managers, investment managers, and people that I talk to in the space, they kind of feel like that 30,000 is pretty much a bottom, that we potentially won't go much lower than that in the future, unless something serious happens in the markets or you get another event like coronavirus. But even then, we know what the government response is going to be. So we're not so sure that it could ever break that level again. The real question moving forward is now, how high can it go and how fast and can it get to that level? And as we've seen here, we've gone from 29,000 to 46,000 in basically, we're on the daily here, a couple of weeks. So we're looking at July 20th, the 20th of July is where that low was. We started our uptrend on the 21st all the way through the 10th of August. So basically you're talking about a month, I guess, pretty close to it. We're about, let's look at the weekly here. And you can see on this trend, we're in our fourth week of an uptrend, 1, 2, 3, 4. So we're in our fourth week of that uptrend. So basically almost a month now that we've been shooting up. So if we continue on that trajectory, and if you look at these weeks from 32 to 35, and then 35 to 39, 39 to 43, 43, if we continue that, then we'd be at 48. So we've been $5,000 weeks basically. So that's not bad. A little passive income there, gaining 5,000 a week if you bought down here. So those are the things that I'm looking at. I'm not a technician. I'm not a technical analyst. I'm an opportunistic investor. I look for value wherever it can be found in any market with all kinds of different assets, whether it's real estate, companies, businesses, stocks, or cryptos. I'm looking to buy low, sell high, and reverse that pattern over and over on larger moves, bigger swings. But Bitcoin's a lot of fun because, at this point at $45,000, it seems kind of, when you look at where we came from at 65, and you look at it at 45 and look at where we were down here at 30, it seems like that's a big gap. That's 15,000 from the bottom, from the lows, and we're about 20,000 to the high. So we're about midway now that we've recouped back in this market. So that's a nice little piece of ground that we've made up there. Nice little daily and weekly profits that can be made in this if that's your thing. But you have to be careful. I do know people out there that are still struggling in this market, and this could entirely be a bull trap. So you have to be careful and be watchful of that. Be watchful of the moon just for fun, just to see if this thing does move down 5 to 10,000 based on that moon, where we could retrace all the way back to the 38,000 level. And again, that's a technical level. A lot of people have been calling out that if we break below that, then we could see some more downside. Watch the patterns in the price action and keep your eyes on the stock markets in terms of what's going on in the markets, what's going on with this legislation. Again, legislation, regulatory guidance, taxation is a good thing for the industry. It needs to happen to bring in the big dollars to really grow the market cap and liquidity of the markets. If you want serious price action, if you want $200,000, $300,000, $500,000 Bitcoin, and if you want the equivalent 2x, 3x, 5x, 10x in some of the large cap altcoins and in Ethereum, then you need liquidity. You need dollars coming into the market at scale. And some of that can come from the retail public to a standpoint, but the big money, the biggest money in the world to invest, the biggest investable capital in the world are institutions, and they can't invest until they have regulation in place, guidance from a tax standpoint, guidance from a compliance standpoint. And all the little issues will get worked out. All the unintended consequences, they're always there. There's always landmines in every piece of legislation. And generally those get restructured, and the appropriate departments provide the guidance to help clarify those things. So that's why the market's not worried about it. So if those things were big issues, we wouldn't be seeing this uptrend, even from a manipulation standpoint. Let's just say this is completely orchestrated, manipulated, which all markets are manipulated. And the more institutional dollars come into the market, the more manipulated it'll get, the more efficient it'll become, and we should have less volatility and less of these huge price swings, because the more dollars there are in the market. For instance, we are almost at $2 trillion again, I think, in market cap. If we look at where we're at today, we are almost back to about a $2 trillion market cap. Overall, 1.8 trillion. Bitcoin's almost back up to 900 trillion. Ethereum's almost at 400 trillion. Um, you know, sounds like a lot, but when you look at other markets, it's really a drop in the bucket. There's markets that trade 3, 4, or $5 trillion a day. When you're looking at 35 billion volume in Bitcoin, 28 billion, it doesn't take a lot of money to move these markets. So that's what you need to think about. There's funds out there that have more money than that they trade in and out on a daily basis. So we need to get this market to 10 trillion, 15, 20 trillion dollars before it can be really efficient, a little bit more difficult to manipulate, and a lot less volatility. And there's a lot of upward momentum to take advantage of to get ahead of that curve before regulation, before institutional adoption and things like that. So a lot of opportunities still, a lot of positive news in the space, a lot of potential upside, but we've got to get through this little correction that we're in right now. We need to reverse trend in the market fully before we're off to the races. So as an opportunistic investor, I look for value everywhere. I am positive. I'm optimistic. I'm always looking for the upside. But at the same token, I want to know, how am I wrong? Where am I wrong? And why am I wrong? And I always want to work from the assumption that I'm wrong. So if I think that this is a bull trap, I want to know, why am I wrong? And how am I wrong, so that I don't misplay this? And from this standpoint of a price action, I'm okay waiting till we get above 50,000 to confirm and go to 100,000 from there. That's plenty of a move for me versus jumping in right now at this price. And then you have a lot of potential downside where you lose a bunch of liquidity. You can put your stop losses in and things like that, but you'll just get stopped out. Once you put it in, you're going to get stopped out, up or down, long or short. And that's a lot of what's going on here. Is a lot of people are still shorting this and they're just getting eaten alive. And then the people that are longing this, they're getting eaten alive as well. So it's very tricky to trade longs and shorts right now on this market. But I would rather lose a little bit of profits here, hedging against the downside, and making a move up here versus getting trapped down here and then having to ride out some sort of a long-term downtrend that lasts 6 months to a year where my liquidity is tied up, versus I can get in and out on multiple moves as we go up. And especially if we go up exponentially, if we go to 50, then 60, then 100, then 150, and who knows where it goes from there. So I'm always looking for the opportunities and the upside, but I always want to know, how am I wrong? How am I missing this trade? How am I on the wrong side of this? And what are these guys trying to get me to do? What is the market maker wanting me to think? And think about how you have felt if you're in the market and you're investing, watching this on a day-to-day basis and as this goes along. What have you been thinking? How's it made you feel? Do you feel like you need to jump in here and you're going to miss out on this exponential move? Did you feel like maybe you were a little worried about more downside potential to jump in at the bottom here? So these moves are deliberate, and they are done for a reason, to help to shake people out of the market and shake their confidence and get them caught up on the wrong side of the trade. So that's what a lot of this is all about. And again, from the regulatory standpoint, if that was a big issue, we wouldn't be seeing what we're seeing right now. We could potentially be fully retracing this move right here before we get any kind of real confirmation and reversal of trend. And then again, we could see a little bit of downside here. So the question is, always question your assumptions, always look at all sides of the equations. You want to be optimistic. You want to look for the bright side. You want to look for the best possible outcome. But at the same time, you have to be prepared for, what if I'm wrong? And more importantly, you need to look for, how are you wrong? How can you be wrong? And what are you missing? So those are the things you need to be looking for. So I love to see both sides of the coin. I like to see the best case scenarios, and I like to be ready and prepared for the worst case scenarios. One of the most important things that an investor needs to be able to do and understand is to be able to, number one, assess risk accurately, calculate that risk accurately, and then be able to withstand that hit if and when it happens, and when you're wrong on the trade, because everybody is wrong at some point in their investing career on something. So you need to be able to handle that and work your way through it and recover and be able to come out the other side, continue to grow and move forward from there. So that is Bitcoin, Ethereum in a nutshell. And we will keep an eye on this. Watch the moon. Very interesting. Again, it's not something that, that I trade or follow or study. I just find it interesting how it's played out, especially over the last year or so in the markets, and particularly the size of the moves on the down and the upside. Very consistent, $5,000 to $10,000 moves up and down with these moon cycles. So anyway, something to watch, a little bit of fun while we are enjoying this price action. I will see you on the next video. And until then, have a great week.